Hello everyone, welcome back to the chat room. My name is Ed Ponzi. It's great to be here with you as always. I'm speaking to you on a Wednesday evening. We're recording this. We're getting it in a day early because it's a big holiday weekend coming up in the US, and I think it's really important that you understand that, whether you're trading currencies or stocks, this is a 3-day holiday weekend in the US. The Labor Day weekend is the unofficial end of summer, and a lot of people are going to be traveling. A lot of people are going to be going to the beach. A lot of people are going to be away from their desks. The way it works, if you don't know, everybody's going to be off on Monday. Monday is the official holiday. So a lot of people take Friday off, or get out. A lot of traders, close up all their positions on Thursday and head for the beach. And the thing that is also interesting is I'm speaking to you on August 27th, and so tomorrow, Thursday is the 28th. The last trading day in August is Friday the 29th. I think a lot of people will not be in the office on Friday, so you could see a lot of what we call position squaring because of the simultaneous holiday and end of the month. You could see a lot of position squaring. So you could see a lot of currencies move around, perhaps a little bit on Friday, because lack of volume does not necessarily mean there's going to be a lack of movement. In fact, a lack of volume can sometimes create more movement. But Thursday particularly is probably a day where you'll see some position squaring, maybe on Friday. So currencies, what does that mean? It means that folks who have been making money like we have on Euro USD, right? Some banks may want to book it for the end of the month. So you're seeing a bounce here in the Euro. Even though there wasn't really any good news out of Europe today, you're seeing a bounce. I mean, obviously the Euro is just getting destroyed here, and it's really fallen very sharply over the past few months. But it looks like even today you could see maybe a little bit of position squaring ahead of this. Wouldn't surprise me a bit. And maybe you'll see a little bit more of that. Maybe you'll see the Euro move up a little bit over the next few days. The pound has been pummeled, so maybe the pound gets a little bounce over the next few days. The dollar has done very well, so maybe the dollar pulls back a little bit over the next few days. It doesn't mean anything. It doesn't mean that the direction of the trend is changing. It just means that traders are sort of squaring up their books before heading to the beach. That's pretty much it. And as far as us, we're still happily in our trades. We're still short our Euro USD position. We got within 35 pips of our third target this morning. I was rooting pretty hard for it to come down further, but I wouldn't be surprised if it comes up a bit. In fact, I would expect it maybe to fill this gap, maybe run up to 132.40 or so. And if you're not in, that might be a nice short-term place to sell short for Euro. One of the interesting things about the Euro, if I take you to the COT report, all right, we'll go to commitment of traders and we'll look up some stats. Whoops, that's the wrong one. The world is pretty darn short Euro, but it could get shorter still. Two reasons why, right? First of all, 195,000 contracts short, 56 long. It's not quite 4-to-1 in favor of the shorts. That's a pretty decent weighting, but notice how the position sizes are both growing on both sides. So open interest is increasing, and usually open interest increasing is an indicator that the current trend will continue. So you look at it that way, and you say also that, gosh, all these people who've been short Euro, they're getting rewarded. We're certainly getting rewarded, right, for shorting the Euro against the dollar. And by the way, whenever we look at this sheet, whenever we look at the CFTC Commitment of Traders report, we are talking about the currency against the dollar. That is understood, okay? So Euro against the dollar here, about 4-to-1, but I think it has more life in it. There's no reason for shorts to cover yet, and the open interest is growing. And if we go to the Japanese yen, by the way, page, it's very heavily weighted, maybe 6-to-1, short to long, but the same situation, open interest is growing, so to me a reversal is not imminent. Dollar yen has been rising, which means the yen shorts are being rewarded, so there's no reason for them to cover yet. So I don't see any reason why these moves can't continue in the coming days and weeks. Okay? All right, so hopefully that squares us up on that. And so I'm just kind of hanging here. I'm very patiently waiting, hoping that we make it down a little bit lower. You know, do I regret not having closed it at 131.50 earlier today? No, because that's not how I trade. I don't alter my plans midstream, generally speaking, and I kind of stick with the plans and just execute, because executing the plan is important. You know, if you're constantly changing your mind in midstream, then you're not really executing the plan that you devised. Let's talk about Euro Swiss, which is getting extremely interesting. We are long Euro Swiss. It came very close to 12050, which is our third entry point, but it did not quite make it there. But it came close. I'm hoping it gets even closer. I love this currency pair. There's no reason, in my opinion, to believe that the Swiss National Bank is about to change their tune regarding supporting the 120 level. So I am in, and I hope to buy more as it comes down. That's the plan. Okay. All right. And again, I'm sticking with the plan. I'm just sticking with the plan. Now, we have a few questions came in, so we'll get to those, and we also have a few things on stocks to talk about too. Some of our stocks are doing very, very well. The JCPenney hit, I'm seeing JCPenney at 11.25. We bought it at 8.60. I think we're up 30% on JCPenney. How's that? First question. Awesome call on Dollar Canada, Ed. Can you please explain again how you came to this conclusion? I am blown away. It looks to have only moved 15 pips for a false breakout. Let's take a look at the chart. First of all, thank you for your kind words. Would you look at this? We set it up to sell short here. We wanted it to do a false breakout above this line and then do a sell short here. And that S stands for sell short. The C stands for cover. That's a buy order. That's why it's green. And look at the amazing, amazing plunge that this took. Thank you so much for giving me credit for this call. I hope some of you made money on it, but I cannot tell a lie, ladies and gentlemen. I did not, and let me explain why. My plan, you can see this little wick above resistance. My plan was to sell it short. I wanted it to touch 110 first. What was the high? 109.96. I missed it by 4 pips. In other words, I had an alert set up to alert me if the price touched 110. It missed it by 4 pips. Therefore, I did not activate the order to sell short. And you look at this, we would have had our first target and maybe our second target also in the same day. Can you believe that? It's a great call, but I missed the entry. I didn't miss it. It didn't really meet my criteria. And the question goes on, and the point is, like, okay, was this a mistake on my part? Listen to the rest of the question. It looks like it only moved 15 pips for a false breakout. That's this little wick right here. Back to the question. My thinking was it did not move enough to get the stops above 110. That's exactly what I was thinking too, and that's why I wasn't in. So you figured it out already. You're asking me to explain my rationale. I said I was going to sell it short if it touched 110. So I wish I could stand here and tell you that, yeah, I shorted it, but I did not. And because why? Because I wanted more stops to get cleaned out first. But man, did this thing, I had the right idea, huh? I think you'd have to say I had the right idea. Burns me, though, that I didn't get in there. Twice as bad because you go back to our previous session and I discussed the whole setup. Entry, stop, targets. Maybe one of you folks got impatient and pulled the trigger anyway. If you did, congratulations. Wish I could share that with you. But that's the way it goes in trading. And you know what? Am I kicking myself? Not really. I stayed true to my plan. As I mentioned earlier, it's about creating plans and executing them flawlessly. It was not my plan to enter if we didn't touch 110. Fact is, we came within 4 pips of it, but we didn't hit it. Therefore, the plan was not met. Some people would get discouraged in a case like this, and they would say, well, that does it. I'm not following the plan anymore. No, don't think that way. Because in this case, if I had altered the plan, it would have worked. But in a lot of other cases, if you alter the plan, the exact opposite occurs. You fail because you altered the plan. So altering the plan wasn't necessarily the right thing to do. It's just the way it happened. This is just the way it happened, and that's the way I look at it. It's just the way it happened. It didn't quite meet our criteria, came very close. Wow. Look at that move. I'd be lying if I told you. I mean, that would have definitely paid for a nice little vacation. So I hope somebody nailed it. Okay. I'm going to go jump out the window now. Luckily, I'm only on the 2nd floor, so I'll probably just sprain my ankle. Okay. Let's move on to the next question. Fundamentals for the British pound are strong, but negative sentiment has driven it down. And by the way, there you see it, right? British pound is gaining a little bit of strength. Why? Could be end of the month position squaring with the holiday coming and the end of the month. Right. Question is, do you think the possible Pfizer-AstraZeneca talks could change that? Pfizer has 1 shot left to do the deal and save tons in tax money. What's your view, Ed? It's funny that you're talking about tax inversions because the Burger King tax inversion was the big story this week. But as far as Pfizer and Astra, let me show you something on the Astra chart. AstraZeneca is AZN. I always have trouble remembering that for some reason. There's AZN. This is the point where, you see, do I really think this deal will happen? The market was really betting on it heavily here. Look at the way it shot up from around 60 to 80, 25%, kaboom. The market at that point assumes it will happen. Then the assumption is maybe it won't happen. We dip down again. Nice little pop over the last few days saying, the market's trying to say, well, maybe there's a chance. It's like Dumb and Dumber. You're saying there's a chance, right? So, but it's not, the market does not believe it to the same extent that it did here. How do I know that? Just based on the price, right? If the market really and truly believed that Pfizer was going to come along and offer $100 for Astra, it'd be trading higher right now. I think the market's now very skeptical of this deal. They're very skeptical as to whether or not Astra really wants to be in this deal. So I'm not so sure that it's going to happen. It would probably create a big boost for the British pound if it occurred. Now, if something does happen, when are mergers generally announced? In the United States, mergers are generally announced after the weekend ends. So if the weekend ends, typical weekend, Saturday, Sunday, Monday morning comes the announcement. They call it Merger Monday here in the U.S. Why? Why does it work that way? Why don't they merge on Wednesdays? Because the lawyers all need to huddle up in a hotel somewhere over the weekend and bang out the final details without anyone finding out. And that's usually why. Now this weekend is very interesting because it is a 3-day weekend in the U.S. So maybe the merger announcement, if it happens, comes on Tuesday. But again, I do not have high hopes that this merger is going to occur at all, because the market is saying, you know what, here I really thought it was going to happen. Here I'm kind of skeptical. I think that's what the market is saying. Okay, but if it were to occur, it would definitely give a boost to the pound. I feel very, very sure about that. Great questions. Just a few questions this week. And now, speaking of tax inversion, I actually had a trade set up for you in the stock market, and I tweeted it out last night, and we are now in the trade. So just let me get back over to the Twitter account. So yeah, I'm unhappy that I missed the Canada thing, but what can I tell you? It's life. Okay. Let's see. The inversion deal that I'm speaking of involves Burger King, BKW, which went flying up on the news. 27 to 33 is about a 20% move in one day. That's huge. But look what's happened since then. These two candles, if you add them together, they pretty much engulf the previous candle. They don't engulf the top of the wick, but they pretty much engulf most of the candle. And I think it's safe to say that anyone who bought Burger King on Merger Monday, when it was up 20%, is probably losing money now. And the most likely scenario at this point is it comes back down and fills this gap. Why do I say that? The company that Burger King bought is Tim Hortons Coffee, which is a celebrated item, a celebrated brand in Canada and in the northern U.S., like in Massachusetts. Tim Horton definitely has a presence up there. Look at the way Tim Horton responded. Tim Horton is being purchased by Burger King, and it is a tax inversion deal. Canada does have a lower tax rate. The tax rate in the U.S. for corporate tax rate is 39.1%. In Canada, the tax rate is about 26%, so you're saving 13% by moving to Canada. Now, people are up in arms screaming, oh, it's un-American for you to leave. Well, lower the tax rate, dummy, and people won't want to leave. I mean, you're stealing 39.1% of the company's money. No wonder they want to leave. And the Astra deal, should that occur, would be an even lower rate for Pfizer. Companies are, they find it hard to grow, and they're looking for any way they can to make money for their shareholders because that's their job. Okay, and so anyway, we have this scenario now where Burger King is merging with THI, Tim Hortons, and it's becoming a Canadian company. It's going to pay a lower tax rate. My trade is to short Burger King on this news. First of all, the chart is telling you that these guys are the longs are about to be flame broiled, baby. They are going to get burned. You can tell just by looking at these candles and the way they engulf the previous one. I would short this stock. It's an interesting deal in that Burger King buying Tim Hortons maybe means that Burger King becomes a destination in the morning for coffee and donuts. Or maybe not. Who knows? Who knows if people in Nevada are going to want to go to a Tim Hortons? I don't know. And I like Tim Hortons, but I have no idea if the U.S. consumer is going to accept this. And for another reason, in the U.S. we are definitely moving away from junk food. And this is just a merger of donuts and burgers. I mean, it's the two junk foods merging together. You know, if Burger King was smart, instead of buying a donut shop, which is, maybe that's not a bad deal for them, I don't know, but maybe instead of buying a donut shop, maybe they should be looking at these these natural burger places like BurgerFi and Elevation Burger, where they have hormone-free, antibiotic-free food, which is exactly what makes Chipotle and Panera Bread so successful, is that, you know, people don't trust the food chain anymore. People don't trust, in the U.S., aren't going to trust Burger King anymore, and they're not going to trust Tim Hortons either. They want something different and better. Burger King should buy a natural burger chain, keep it independent, and then they're playing both sides of the fence, right? Now they're still selling you that junk food, but at the same time, if you go across the street, you go to the all-natural burger place. Either way, you're buying a burger from Burger King. You just might not know it. Remember, Chipotle was part of McDonald's. McDonald's food is horrible for you. Chipotle is very healthy for you. So if McDonald's can spawn Chipotle, then certainly Burger King could spawn a natural burger chain, a separate entity from itself. That's what it should be doing, not buying donut stores. What are they going to do? They're going to put, you know what they're going to do, is they're going to put two burger patties inside of two donuts, and it's going to be a donut burger. You know that's going to happen, right? I mean, is there any way that's not going to happen? I'm not going to eat it. I'll tell you that. I don't think Rick's going to eat it either. Okay, so not only do we not like these aspects of the deal, let me run some, for my fundamental friends out there, let me run a few numbers by you. By the way, the trade is long Burger King, which I believe is going to come down, I'm sorry, short Burger King, which I believe will come down to around 27 or 28, and long McDonald's, which is near support. Bouncy, 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 bounce. McDonald's over and over again, right? I can get McDonald's near support. At this price, McDonald's has a dividend yield of close to 4%, whereas Burger King has a dividend yield of 1%. So I'm going long a stock at support that has a 4% dividend yield, and I'm going short a stock that looks like it really wants to come back down, and this one only has a 1% dividend yield, so really I get to keep the 3% differential. And it's market neutral. It's a long position and a short position, so it's market neutral. So long McDonald's, short Burger King. Let me throw some statistics at you. McDonald's, the enterprise to EBITDA value of McDonald's is 10. Now, if you're not familiar with that, you know, it was in the course, or just look it up online, enterprise to EBITDA value. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. Okay, enterprise value to EBITDA ratio. McDonald's, 10. Burger King, 19. McDonald's is a much cheaper stock based on enterprise to EBITDA. Burger King is almost twice as expensive as McDonald's if you use that metric. Let's use a different metric. You know, the forward price earnings ratio of the S&P 500 right now is 16.75. 16.75. The forward PE of McDonald's is 15.72. That's below the average, that's below the S&P 500's PE. Is McDonald's, just a little bit below. Burger King's forward PE, 26.62, way above the S&P 500 average. This stock is priced for perfection. Okay? And those are the statistics, you know, that I wanted to shout out to you. Let me give you another one. Price to sales. In other words, forget how much is profit. Just take the sales of the company and add them up. And that's on one side of the equation. On the other side of the equation, add up the cost of buying all the shares of the company. The price to sales ratio of McDonald's, 3.27. Burger King, price to sales ratio, 10.47. More than three times as expensive is Burger King using that metric. Long story short, this stock's valuation is higher than your cholesterol level after eating a Whopper and fries. Okay? Short Burger King, long McDonald's. Let's take a look at some of our other stocks. J.C. Penney is just, look at it go. Look at it go, 11.20. We bought it at 8.60. That's more than 25%. That's probably close to 30%. It could be more. I don't know. I don't even know. It's more than 25%. I know that. And look at that breakout. It's got room to run. The next resistance level is not till 12. I think it's going to make a beeline for 12. It's sweet. How about Apple? We've been owning Apple for a long time. And it hits another new all-time high today. Apple, September 9th is the big date. They're probably going to announce the iPhone. They might announce a new iPad. I hear they're going to announce an iPad that has a 13-inch screen that basically makes it a laptop. How much you want to bet the next iPad has a screen as big as a laptop computer with a detachable keypad, just like Surface has? Voila, your next laptop is an iPad. There it is. And you save everything on the cloud. That's it. You save everything on the cloud. Our other long position is Dean Foods. Well, it's not killing us, but we are losing money on this one. But the other two kind of make up for it, especially, oh, gold. Listen, we're still in GLD. The one thing I'm waiting for, see this support level? And we're down on this. Like, we bought this breakout here, and it went up. I should have sold it up here. I wish I had. But, you know, I thought it might break that level. And it's down here. If it breaks this line, then I'm going to get out. So if it gets under 122, I'm done with it. That's pretty close by. But I'm hanging on, hoping that it stays within that triangle. Now let's look at our shorts. Lululemon has been very good to us on the short side. It is creeping up a little bit, but, you know, what do you expect? The S&P 500 is now at 2,000. Right? There it is, 2,000. Which, by the way, does not mean that 2,000 is broken. It just means that we are at 2,000. Okay, if people tell you, people are going to tell you, oh, we broke 2,000. We did not break 2,000. Yesterday we formed a doji and finished the day exactly on 2,000. I'm sorry, it wasn't a doji yesterday. It was a shooting star. Yesterday we formed the shooting star and ended the day exactly at 2,000. Today we formed a doji and ended the day exactly at 2,000. That to me is not a breakout. That to me is we have reached 2,000 and the market does not know if it wants to try to go higher or pull back at this point. Shooting star, doji. One thing I got to tell you, the shorts got to be pretty dismayed that this thing, every time it looks like it's going to break down, it just goes higher. You wonder if anyone's ever going to short this thing again. So speaking of shorts, our Lulu is doing fine. It has come up a little bit, but we're still very happy to be in this position. TJ Maxx, it's just kind of hanging there. It's not really hurting us. Again, I'm waiting to see if 2,000 hangs or breaks for this one. This one's a loss for us. We hate this. I hate looking at this one. But, you know, it is what it is. And Kimberly-Clark, KMB. Even though we're down a few points on this, I like this position. We're down $2 on this. That's less than 2%. The market's hitting all-time highs. We're only down 2% on this short. That tells me that if the market does turn and go down, we are in the right stock. This is a good stock to short. If the market goes down, I think we're going to clean up on this one. It's way overvalued, and it's a consumer staple. They make diapers, for crying out loud. It's not a tech stock. They don't make computer networking diapers. They don't make computer chips in diapers. They just make diapers, man. It's overvalued. It's pretty simple. Okay? All right. Anyway, we're doing well. We're doing well on the stock side. New position. Short Burger King, long Mickey D's. And we have 4 longs and 4 shorts, so we are still market neutral overall. All right, ladies and gentlemen, that ought to cover it. Thanks again for the great questions, and everybody have a safe weekend. We will speak to you again very, very soon. Everybody take care.